Don, I would love to first give the word to you. With gold at $5,000 an ounce, or at least above it, silver in the triple digits, what are you seeing currently for the risk-reward in junior mining right now?
Well, definitely I think the reward's pretty obvious. We're in a bull market, and we have the wind at our back. I don't see a path for 2026 where gold doesn't go higher, which is kind of an amazing feeling. We've really never had this ever in the history, where we've had this kind of strength in a bull market. I think this bull market began in August, because that's when silver broke out. Silver's at $35 first week of August, and today it's up 200% in 6 months. So that's really when this thing started. So now we're kind of in a full-fledged bull market, and we got the wind at our back, which is amazing. There will be more volatility in silver than there is in gold. I don't expect, we had a 12% correction in gold in October. I don't think we're gonna have another one of that size. It's possible, but I think that this year, and gold has become the buy the dip asset, so the reward is pretty obvious. The risk, in my opinion, is opportunity cost. Basically buying the wrong stocks, making a mistake. You want to take advantage of this bull market. So that's where I really see the risk this year. The risk is going to increase, of course, over time as as this bull market goes further and further, because you don't know where it's going to end. But right now, the risk reward is amazing. I'm seeing very undervalued stocks. I was just looking at Silver Storm. I couldn't believe how cheap that stock was because San Diego isn't priced in. That's just one example. I found several. But the upside is absolutely amazing. But that's where I see it. I see kind of the risk as kind of buying the wrong stocks, and the reward is being, kind of buying the right ones. But right now, it's kind of amazing. The opportunity. These bull markets are rare. This is the third one. The first one was 79.80. The next one was 2009 and 2011. And both of those bull markets, we saw these miners get expensive. And right now, that's one of the reasons why we can say we're early, is because they're cheap. So I'll turn that to Brent.
Yeah, Brent, I would love to hear your take as well. What are you currently seeing for juniors as they're trading at fresh 52-week highs? How's the risk reward looking right now?
I'm likewise, and unusually so, very positive on what the gold price is. I see much more reasons for it to continue staying where it is or going higher. Having said that, I've been taking money off the table on some of the stocks I've held for 2, 3, 4 years, like a junior explorer in Australia. It's up over 1,000%. It's looking at a 2.7 billion market cap with no resource. It's a great deposit, but at $2.7 billion, what's the odds that I'm going to get a double from there? So I'm taking money off the table with that and rolling into very select juniors. And like I said in my presentation, I'm looking for good people employing good money in good projects. That's the key to this. And to get there, you want to be certain that the company knows what they're looking for. And by that I mean what it would cost if they're successful to build this thing. And they need to know what it is, when to quit. Too many of these companies keep plugging and plugging away and just wasting money rather than cutting bait and moving on. So there's the real risk, and I think we will see some of these stocks that are up, 10x over the next few years drop down a lot. So I guess I'm cautiously optimistic. Does that sound right?
Cautiously optimistic, all right. And Don, I would love to hear your take on quality. How important is it to buy the right equities as we're heading into the next legs of this bull market?
Sounds like you've been listening to me. I'm all about quality. I want to own, in my portfolio, I want to have a foundation of quality. So basically that's quality producers. I want to own as many quality producers I can get my hands on. So I want 40, 50% of my portfolio to be quality producers. Then you have to decide how long you're going to hold them. At what point does a stock get pricey? When do I sell? When do I take profit off the table? But right now I'm feeling really good because I own a lot of quality producers. Then they have the best risk reward by far. They're going to participate. You're going to notice that. They always say the producers lead, and the large producers are the first ones to go, but they lead this market up. The next one is your developers, and that's where quality really comes into play. I gave a presentation yesterday, and I talked about the checklist of 6 items that I look for. If a company doesn't have all 6, then it's not a quality developer, and I pass. Once in a while, one of those 6 I'll basically gamble on, but by and large, I'm looking for a company that checks all 6 items, and then I know it's a quality development project. But I firmly believe that you want maybe all of your stocks to be quality producers and quality developers. You can go with some quality exploration stocks, but in a bull market, even those, you're going to wait for drill results. And those drill results, normally it's going to take 2, 3, 4, 5 drill programs for them to really manifest a value that you want. Whereas in a bull market, the producers are just going to manifest higher, they're going to participate with higher gold and silver prices. And the developers are going to come behind. So right now, we're early innings in this bull market, so the developers haven't really caught up yet. They're very, very cheap. And so they're the next leg. And so if you own the quality developers, then you're going to participate in a big way in this bull market, in the mania phase of it. So that's where I want to focus my attention. Brent just talked about what he's looking for, and this is what I'm looking for, is basically quality producers, quality developers. And I think we only have a little bit of time left, I think, to find these stocks before they get pricey. Maybe 6 months, and then I'll stop buying because there won't be any quality that's affordable.
Brent, of course, Don started touching base on business models, developers, explorers, prospect generators, royalty companies. Could you take us along what you're seeing in the risk reward for those different verticals, those different business models?
Right now, it's a lot easier to raise money. So the prospect developer model is still a great model, but I think companies can afford now to take a property a bit further before they bring in a joint venture partner, because they can raise money at a much higher price, if you will. So I still think that prospect generator model is an excellent way to go, whereby the company you own, I think most of you have heard about this before, but anyway, your company you own develops an idea, concepts, takes it, lays out what the plan is to test this target, and brings in somebody else with the money and skill to take it forward if they're successful. And in that sense, you don't dilute your interest in the business, and the business is exploration. So I think that model works. I think certainly a company that has a clear target that makes a lot of sense, either through geophysics, geochemistry, is on trend for something and you can see it. Right now, I think it's worth spending the money targeting those and drilling those out, testing your concepts. But again, you got to cut bait as soon as your thesis is not working. Cut bait, move on. Hope really doesn't work.
All right. I would love to talk about pullbacks for a second. Of course, we're seeing very explosive moves, especially in silver, very much to the upside. Don, what are you currently thinking about a potential for a pullback? Should one prepare for that and allocate their portfolio differently to, be able to potentially buy the dip?
Yeah, I get this question a lot. A lot of people are late to the game, if you will. Like me and Brent, we've been doing this for a long time. There's a lot of people that are new, and they're wondering, do I allocate my money now or do I wait for a correction? It's a really difficult question. But what I've said is that in a bull market, first of all, I want to say this, is that if we're investing in gold and silver miners, we're speculators. We're not investors. And you need to recognize that. Too many people buy a gold and silver mining company and think it's an investment and that all it's going to do is go up. That's not what this is. You really need to think more longer term. You need to know why you own a stock, what you're expecting from a stock, and you can expect volatility. So what I've said is that in a bull market, you should get higher highs. So even if you get a correction, that correction should only last for, say, 4 to 12 weeks, and then you got another higher high. That's exactly what happened in October. We had a 22% correction in the HUI. So most people, their portfolios went down 25% approximately, and it only took 4 weeks to recover. So what I've said is, I want to ride this train. It's a bull market, I'm going to ride it. I'm not going to wait. I'm not going to wait for a correction to get in. But simultaneous to that, I'm going to keep some money on the side for when the correction comes, and I'm going to buy the dip. So what I'm going to do is ride the train and buy the dip.
Brent, is there a specific subsector of the market where you're currently finding great ideas to allocate your capital to?
No. No, I just focus on one thing, and that is, like I said, to start with quality people, employing good money into quality projects. And I'll go anywhere. You mentioned silver. I am real nervous about silver. It's gone from, $40 to 110 in a very, very short time. To me, that's $110 silver is not a reasonable price, and I only own one silver stock now, but I would be very cautious on that. Gold, I think, looks good. And in regards to copper, longer term, I like copper probably best of all, given what we know about supply and demand, future demand, and lack of future supply, and with the caveat that if the madman running my country takes the global economy down with him, copper looks really good, but I'm nervous about that happening as well.
Right, thank you for outlining that. And Don, what about you? Where are you currently finding the best ideas right now?
Really in the developer space. The producers are starting to go up, and so it's harder. I'm looking for 10 baggers. I've always looked for 5 to 10 baggers. That's kind of been my sweet spot. I've always tried to have, my goal is a 500% return, and that looks totally doable now. So I always look for 5 to 10s, and so I own a lot of them. So I've been looking for 10 baggers, and it's not very easy now at this time to find 10 baggers in the producer space. There's a few. I think Avino still has 10 bagger, blows my mind, but I think it still has 10 bagger upside. There's not that many producers that have 10 bagger, but there's quite a few that are 7, 8, 9. First Majestic, some of these silver miners, Endeavor, even Pan American, some of our producers are still cheap. They won't be cheap much longer. But in the developer space, there's a lot of 10 baggers. I'm still finding them. I don't know how much longer I'm going to find them, but when I find a 10 bagger that checks all the boxes, I buy it. I just collect them because I want to own as many as potential as I can get my hands on. So it's really the developer space right now where I'm finding opportunity. And I think we're going to have that for at least 6 more months. I don't know how much longer than that, but I'm much more bullish than Brent is. Like, for me, silver's at $100, and I think it's still cheap. I think that the wind, first of all, I don't think this is really a silver story at all. I think it has nothing to do with silver. This is all about gold, and what's driving gold is the U.S. bond market. And as long as the U.S. bond market continues to have stress, if you will, gold's going to continue to trend higher. And I don't know how the stress is going to come off the bond market. I think the stress is going to increase. And so this is all about gold. I think gold's trending to $7,000 and maybe higher, and silver's going to follow. Silver's just becoming a monetary metal. And now I do think gold's going to be very volatile. I think we could see $70 silver in a month. Wouldn't surprise me. But it's just, as long as gold trends higher, silver's going to trend higher. So I just see all these as buy the dip opportunities. I see 26 this year as being even better than last year. Now, we might not have as good as returns. Like last year, we had a lot of the ETFs were up, I say average 175%. I don't think they're going to do that again. But ironically, it's going to feel easier because a lot of that was unexpected, if you will. So it's like everything just exploded in August. But this year, I just see it as kind of an easy ride for the whole year. Some volatility, but we're going to feel better about it because we're going to have this momentum. So the momentum is going to make it easier, but I think 27 is the year it's going to be a little harder.
Brent, did I interpret your body language correctly that you wanted to respond to this, or did I interpret that incorrectly?
It makes me nervous when you're so positive.
I'm not the only one, though. Everybody's positive.
Brent, I would love to talk about the risk side of the risk reward for a second, jurisdiction specifically. We oftentimes hear, for example, African countries being identified as very risky, North America seen as jurisdictionally safe. How are we viewing the West, North America right now? Is it a great place to discover and find a mine?
Yeah, I think so. I think the U.S. In the same states that have always been positive, or positive, if not more positive, in terms of getting permitting and such done faster. I think that's a positive. BC, I'm unsure about. Quebec is great. The rest of Canada is great. Mexico is great, provided you work with the locals and you know where your water's coming from, that sort of thing. Underground, way better than open pit. Bolivia is getting better. Argentina is getting better. Brazil's always better. Guyana. Those are the places I think are probably the most positive. And Guyana as well, yeah.
Regarding commodities, you mentioned there's nowhere you wouldn't go. What about jurisdictions? Is there a no-go list for you?
Well, obviously California. A lot of the West African countries I think are sketchy, but there's some good ones. Like Guinea is all right. Colombia I would be very nervous about. Venezuela, I don't know what's going to happen there. Australia is great. Japan. There's not a lot of places. I guess the usual places I wouldn't go. You know, if you wouldn't want to go there on a holiday or take the missus, you don't want to go there.
And Don, what about you? How are you thinking about jurisdictional risk right now? Is there a no-go list for you?
I like this question. I've been telling people that you want to start in good jurisdictions. That's where you want to be overweight. I was talking to somebody today, and he had his biggest position was in West Africa. To know that's not where you want your biggest position. Yeah, it might work, but that's just not where you want to focus. You want to focus in Canada. You want to own all the silver producers, well, as in me. I want to own all the silver producers in Canada, and I want to own all the quality development projects in Canada. Same in Australia. I want to own all the mid-tier producers, and I want to own all the quality development projects. And the reason why, and you can say that also in the US, now I'm talking about companies that only mine in Canada and only mine in Australia. Those are the ones that are going to benefit from my thesis. My thesis is that those are the companies that people are going to want to own. So we're going to front run that because those are the companies that have unlimited blue sky as far as valuation. Those are the companies that can get 20, 25, and 30 multiples. Those are the companies that can be absolute skyrockets. So, I mean, we've seen a vino in Mexico go from 50 cents to $7, and that was in Mexico. Companies in Canada are going to do the same thing. So I just absolutely love Canadian. You were talking about jurisdictions. I want to focus first. I want to be overweight in the good jurisdictions because those are the ones that are going to benefit big time. And we're running out of time.
Excellent. Sadly, we're running out of time. Don de Red, Brent Cook, thank you so much for your insights. Let's give them a round of applause.